Welcome to the deep dive. Today we're really digging into something huge in the financial world.
Yes, the intelligent transformation of banking using AI.
Artificial intelligence, yeah. We're working from a pretty detailed report by KPMG International. It's called Intelligent Banking, a blueprint for creating value through AI-driven transformation. And our goal here really is to cut through the noise. We want to give you the essential insights where AI actually stands in banking today, what the real roadblocks and opportunities are.
And importantly, a framework for how banks can actually make this work.
Exactly. Consider this your guide to getting up to speed on AI and your money, essentially.
Right. We're pulling out the crucial bits from this blueprint. It's more than just tech talk. It's about how banks might fundamentally change how they operate.
Okay, let's kick things off. Where does AI actually stand in banking right now? We hear about it all the time, but what's the reality?
Well, it's a bit mixed, actually. The report shows that, almost all banks see AI as vital. They're using it.
For efficiency, mostly.
Yes, mainly for efficiencies. But here's the kicker. Only about a quarter are reporting actual revenue growth from their AI efforts.
So there's a disconnect there.
A big one. They're investing, getting more efficient, but maybe not focusing that investment where it directly grows the top line yet. It suggests maybe a need to rethink where the AI focus should be.
That's really interesting. So if revenue isn't the primary gain yet, what are the main goals? What are they laser focused on?
The report's pretty clear here. Number one, reducing operational costs.
Okay.
And number two, significantly improving the customer experience. Those are the big drivers right now.
Makes sense. Efficiency, keeping customers happy. But what about the longer view, the big picture? What are execs expecting down the line?
Oh, expectations are high, really high. Something like 80% expect a moderate to very high ROI on their AI spending.
Wow.
And about 2/3 believe that banks who really nail AI integration will get a serious competitive edge.
So they're betting big on this. Is that showing up in the budgets, or are they putting their money where their mouth is?
Absolutely. Around 70% plan to increase their global spending on AI.
So real conviction there.
Definitely signals they believe in its transformative power.
Now, generative AI, that's been the really hot topic everywhere. How's that playing out in banking, according to this report?
Well, banks are definitely kicking the tires. They're experimenting, especially with things like smarter chatbots for customer service or using it for hyper-personalized marketing. But the report suggests they're still sort of figuring out how to get past just experimentation, how to really extract significant measurable value from it.
Still early days for Gen AI value, then. What about AI agents? That term sounds futuristic. Digital employees.
Kind of, yeah. Think of them as smart software that can act independently. They can handle tasks, make decisions towards a goal, like managing complex customer queries or automating back-end processes.
Okay.
The report really flags these as potentially transformative. Imagine highly personalized, 24/7 service, plus huge gains in operational efficiency.
That does sound like a leap. And what about the people inside the banks, the employees? How are they coping with all this AI being introduced?
Surprisingly well, it seems. The report says about 85% of employees are getting comfortable using the new AI tools their banks are rolling out.
That's a high number.
It is. Suggests pretty decent adoption on the ground level.
Okay, so lots of activity, high hopes, good employee adoption, but trouble turning it into actual revenue growth yet. Let's shift to the challenges. What are the main things tripping banks up?
Yeah, the report lays out several key ones. The top three that really jump out are 1, security and data privacy concerns. That's huge in finance.
Non-negotiable, really.
Absolutely. 2, a lack of people with the right AI skills and expertise.
The talent gap.
Exactly. And 3, just the sheer difficulty in proving a clear return on investment for these AI projects.
That ROI piece seems critical for keeping the funding flowing.
It really is. And the report also flags other big ones. Managing ethical risks, dealing with data stuck in different silos across the bank, and just poor data quality overall.
You can't build good AI on bad data, right?
Precisely. Garbage in, garbage out still applies.
And the overall risk side. Is it easy to just deploy AI everywhere?
Far from it. Many banks struggle to build a solid risk management framework, especially for using AI in regulated areas like, say, loan decisions or compliance checks.
So worries about how the AI works, operational integrity, keeping regulators happy?
All of that creates significant hesitation for wider rollouts.
And the tech itself keeps changing so fast. Does that complicate things further?
Oh, definitely. The sheer pace of advancement, plus deciding between using, proprietary platforms versus open source options, it adds layers of complexity when trying to scale up.
You mentioned inertia earlier. How big a factor is that resistance to change?
It's a major drag. Established institutions often find it hard to really rethink core processes.
Hmm.
Overcoming that, plus the struggle to define long-term value and prove ROI, often slows things down.
And the cost. It
Yeah.
must be pretty substantial to implement all this.
Yes, the upfront investment in upgrading tech, plus the risks involved if an implementation goes wrong. It makes senior leaders understandably cautious. They see the potential, but they're also very aware of the costs and risks.
Data keeps popping up. What's the fundamental problem there? Is it just the silos?
Silos are part of it, but often it's the basic quality. If your data isn't consistent, reliable, easily accessible, you just can't build accurate AI models. Different departments using different formats, data not talking to each other, it hinders getting that complete picture needed for effective AI.
And for global banks, the regulations must be a nightmare.
A significant one, yes.
Yeah.
Trying to meet different rules and expectations in every country they operate in, that's a major challenge highlighted in the report.
It sounds like a lot for leaders to handle, maybe overwhelming.
The report does suggest that. Some leaders are taking a bit of a wait-and-see approach. They feel flooded with information, maybe some hype, and think it's better to let the tech landscape settle a bit before making massive bets.
And the lack of internal AI experts, that seems like a core bottleneck.
It really is. Not having enough dedicated AI teams driving the strategy and not using AI enough for core product development yet. That's holding banks back.
And accuracy is everything in finance. AI isn't always 100% predictable, is it?
Exactly. There's very little room for error. So the need for AI outputs to be consistently accurate, reliable, and crucially explainable, that limits how broadly some AI tools can be used, especially for critical decisions.
What about sustainability? That's a growing concern everywhere.
Yeah.
How does AI fit in?
That's another tough balance. AI can be energy intensive, so banks are struggling to square the benefits of AI with their environmental commitments.
Interesting point. Lastly, the report mentioned nervousness about the big AI tech providers.
Yeah, a fair number of leaders worry about becoming too dependent on these large tech companies, about the influence they might gain over the bank's operations. Maintaining control is a factor.
Okay, so a whole raft of challenges.
Yeah.
But the report offers a path forward, right? This idea of building the intelligent bank. What's the structure?
Yes, it proposes a framework with 3 layers. First is the foundations layer.
Getting the basics right.
Exactly, building that essential tech stack. Solid infrastructure, cloud capabilities, good data management, cybersecurity, maybe even exploring things like quantum computing down the road.
Okay, the building blocks. Layer 2.
That's the functions layer. This is where you actually apply AI across the bank's different business functions.
Making it practical.
Right. Embedding AI tools and those AI agents we talked about into daily workflows,
Yeah.
improving customer interactions, streamlining internal processes.
Got it. And the top layer.
The enterprise layer. This is the big picture view. Orchestrating change across the entire organization.
How so?
Aligning the AI strategy with the overall business strategy, adapting business models, evolving the workforce, managing risk at the enterprise level, and crucially, setting up a dedicated transformation management office.
Ah, that office sounds important. What does it do?
It's vital. It's the central coordinator. Makes sure the AI strategy fits the bank's goals, ensures value is actually being delivered, manages funding, tracks benefits, sets standards, gets different teams working together. It drives the whole thing.
Okay, a clear structure. Now, within that, the report talks about 3 phases of transformation: enable, embed, and evolve. Let's start with enable. What's the main focus there?
Enable is really about getting the ball rolling, empowering people, putting the basic AI foundations in place.
Like step 1.
Exactly. Key actions are things like appointing a senior exec to own AI, creating an actual AI strategy, identifying some initial high-value use cases.
Where can we get quick wins?
Sort of, yeah. Plus, boosting AI literacy across the workforce, making sure you're aligned with regulations, setting ethical guidelines, and actually launching some pilot projects.
Starting small, testing the waters.
Right. Often using cloud platforms and pre-trained models to get going relatively quickly. And interestingly, in this phase, leadership focus tends to be more on operational gains, saving money, being more efficient rather than huge strategic shifts just yet.
That makes sense. Focus on tangible benefits first. The report gives some pretty powerful examples of this, doesn't it?
It does, like AI and fraud detection. One big credit card company apparently stopped $40 billion in fraud in 1 year using AI.
40 billion, wow.
Yeah. And for efficiency, a U.S. bank using AI to process legal docs in seconds instead of hundreds of hours manually. Or AI in loan underwriting cutting approval times drastically from weeks down to days for one global bank.
Those are big impacts. How does this start to change things for customers and employees in the enable phase?
For customers, you start seeing things like AI chatbots answering basic questions, maybe some personalized product recommendations, smoother ID checks for opening accounts.
Mhm.
For employees, it's about automating some repetitive tasks, freeing them up for more complex work, and giving them tools, maybe AI assistants, that provide insights about customers.
The report had a couple of case studies for this phase, too.
Yeah, one was a large German bank. They're kind of in this phase now, different teams experimenting, but no single unified strategy yet. They're seeing some efficiency gains, like in software development, but hitting roadblocks with regulations and finding enough AI talent.
Common themes there.
Right. Another case showed KPMG building a Gen AI chatbot for a global bank, specifically to analyze compliance documents much faster and more accurately. Big time saver.
Okay, so Enable is about getting started, laying foundations, seeing early wins. What's the next phase, Embed? How does the focus shift?
Embed is about going deeper, moving beyond pilots and really integrating AI into the core operations.
Making it standard practice.
Exactly. Weaving AI into end-to-end processes, into product services, the key value streams, aiming for bigger impact across the board.
So less experimenting, more system-wide adoption. What does that require organizationally?
You need strong leadership here. A senior exec, backed by that transformation office, driving efforts to redesign jobs, reskill the workforce to partner with AI. Big focus on doing this responsibly, ethically, building trust, ensuring security.
And technologically.
You see deployment of more advanced AI agents, more diverse AI models. This often needs modernization of both cloud and older legacy systems. Shared data platforms become critical, and you start developing more sophisticated AI that can act more autonomously.
Where are banks typically embedding AI first? What are those key value streams?
The report highlights several. Loan origination, the whole process. Customer onboarding. Fraud prevention, making it much stronger.
Yep.
Payment processing, making it faster and smoother. And customer retention, using AI for more personalized engagement to keep customers happy and drive growth.
Sounds like a much more integrated approach. But the report warns about barriers in this embed phase, too.
Oh, yes. Several big ones can stop banks from really getting the value. Things like an incomplete vision for how the bank will operate with AI, outdated tech infrastructure holding them back, weak governance frameworks,
Trust issues again?
lack of trust, definitely, difficulty coordinating across silos, workforce worries, job fears, skills gaps, and just keeping up with the pace of AI tech while managing legacy systems.
It's a lot to juggle. The case study here was about Loomis, a U.S. financial services firm.
Right. They manage cash, provide smart safes. They're using AI for operational stuff like better cash forecasting, but also for customer engagement. Their CIO mentioned the early struggles finding AI talent, dealing with tough regulations, and needing business leaders to really understand what AI can realistically do.
Even for operational focus, the challenges sound familiar. Okay, on to the final phase, evolve. What defines this stage?
Evolve is about fundamentally rethinking the business model itself, creating new value through AI and other frontier tech, often by building ecosystems.
Ecosystems, like connecting with others.
Exactly, moving beyond the bank's own walls, creating networks maybe with customers, suppliers, fintech partners, even regulators, all orchestrated by AI to deliver value seamlessly, tackling bigger industry-wide problems.
So, transcending the traditional bank structure.
Pretty much. AI integrates with things like quantum, blockchain, driving real innovation in financial products. Ethics, safety, trust become absolutely central, needing sophisticated, real-time monitoring. And there's a huge emphasis on continuous workforce, learning to drive constant innovation. Imagine AI agents working across silos, optimizing everything, creating amazing customer experiences.
The report gave some glimpses of what this evolved bank could look like.
Yeah, it talked about AI-driven autonomous banking, AI managing more of your financial life, AI-powered digital marketplaces where banks become platforms offering services from many providers, like Ping An in China.
Interesting.
Also, the synergy of blockchain and AI for security and efficiency, like JP Morgan's Quorum, and AI-driven predictive finance banks anticipating your needs before you even know them.
And the case study for Evolve. A European bank using KPMG's OpenAI platform.
Yes, a bank serving small and medium businesses. They wanted deeper customer insights to improve their services. They used KPMG's platform to analyze huge amounts of customer survey feedback.
And the result?
It slashed the analysis time from months down to weeks and gave them much richer insights than before, leading to actual improvements in what they offered customers. AI unlocked a deeper understanding.
So Evolve is about new business models, ecosystems, true transformation. Looking across all three phases, enable, embed, evolve, what are the big takeaways? The key things banks need to do to accelerate AI adoption successfully.
The report boils it down to 4 critical actions. First, you absolutely need an AI strategy that fits your core strengths and is laser-focused on creating real value.
Not just AI for AI's sake.
Exactly. Needs a unified vision, cross-functional teams working together, and clear, measurable goals, OKRs. The report notes many still lack that fully integrated strategy.
Makes sense. You need a clear roadmap. What's number 2?
Build trust into the entire transformation. That means strong AI governance, embedding ethics and bias checks, prioritizing privacy right from the start, and serious investment in security and resilience.
Trust is the bedrock, especially in finance. Third action.
Create the right tech and data infrastructure. Invest in scalable, flexible systems. Cloud is key here. Establish robust data management practices, focusing hard on data quality and observability. Go for modular, interoperable solutions. And have a balanced investment plan, some foundational, no-regret moves, plus controlled experiments.
To get the plumbing right. And the fourth key consideration, it must be about people.
Absolutely. Foster a culture that uses AI to uplift human potential. You need leaders who champion AI. You need an AI-literate workforce that means training. You need to manage the change and address resistance. And you need to rethink roles and careers for this new human-AI partnership.
Strategy, trust, infrastructure, and people. Seems like the core pillars. So looking ahead, how should banks prepare for this future that's clearly coming fast?
Well, first, acknowledge AI isn't just a trend. It's a powerful, accelerating, disruptive force. No burying heads in the sand.
Right.
Second, build a compelling case for AI's long-term value beyond just saving money. Think personalized experiences, new business models. Look at what competitors are doing and consider the risk of not acting.
Inaction is a risk itself.
Definitely. Third, tackle the risks head-on. Robust frameworks for ethics, compliance, security, operations. Create a culture of transparency and proactive risk management.
Be prepared.
And finally, take those no-regret actions now. Invest in the foundation's infrastructure, data governance, AI-friendly operating models. Get ready for what's next. Waiting is not a viable option.
Some really critical points there. So if we wrap up this deep dive into the KPMG report, AI's impact on banking is huge and growing. Massive opportunities for efficiency, better customer experience, new business models.
But also significant hurdles.
Yeah.
Implementation challenges, risk management, getting the right talent.
Right. And that three-phase framework, enable, embed, evolve, plus focusing on strategy, trust, infrastructure, and people, seems like a solid roadmap for navigating this.
It provides a structure for banks to really try and unlock AI's potential in this complex environment.
It really does.
And maybe the final thought, the provocative question for you, our listener, is this. With AI evolving so quickly and finance becoming ever more connected, how will banks strike that crucial balance? The balance between the drive to innovate and the absolute need for security and ethics.
Yeah.
How will they manage that tension to truly thrive in this intelligent economy?
That's the key question, isn't it? Something to definitely ponder as we all watch this space evolve.